In the fast-paced world of small business, securing funding can be a daunting odyssey. Navigating a landscape overflowing with loan options, lenders, and intermediaries can leave even the most seasoned entrepreneur feeling lost. One name that frequently surfaces in this quest is OnDeck. But when it comes to OnDeck, a crucial question arises. Is it a direct lender or just another twist in the financing labyrinth? Unraveling this mystery requires dissecting the intricate ecosystem of small business lending. Traditional banks often favor established businesses with stellar credit, leaving bootstrapping startups and growing ventures facing rejection. This is where alternative lenders like OnDeck step in, promising swift and accessible financing solutions. Understanding the lending landscape. Before analyzing OnDeck's role, let's differentiate between the key players in the game. Direct lenders. These entities like banks or online platforms like OnDeck fund loans from their own capital pool. They assess your application, approve and disperse the funds directly, handling the entire process in-house. Brokers. They act as matchmakers, connecting borrowers with suitable lenders for a fee. They don't fund loans themselves but earn commissions by facilitating deals. Marketplaces. These platforms aggregate loan offers from various lenders, allowing borrowers to compare rates and terms before choosing one. They don't fund loans but provide a comparison hub. So, where does OnDeck fit in? The answer is both yes and no, depending on how you interpret direct lender. OnDeck as a direct lender. Application and approval. You apply directly on OnDeck's platform, and their own underwriting team assesses your eligibility and approves or rejects your application. Funding and servicing. Upon approval, OnDeck disperses the funds directly to your account, and you make repayments to them directly. No middlemen. There are no brokers or third-party lenders involved in the process, making it relatively streamlined. But here's the no part. Partnerships. OnDeck collaborates with other lenders through a marketplace program. If your application doesn't fit their criteria, they may offer you alternatives from partner lenders. These loans wouldn't be directly funded by OnDeck, but by the partner institution. Securitization. OnDeck sometimes sells its loan portfolio to investors, meaning your loan could eventually be serviced by another entity. The nuances of OnDeck's directness. While OnDeck handles much of the process internally, the potential involvement of partners and securitization adds a layer of complexity. It's essential to understand these nuances before assuming direct means absolute control over your loan throughout its life cycle. Weighing the advantages and disadvantages. Pros of OnDeck. Fast approval and funding. Known for their speedy process, OnDeck can approve and disperse loans within days, ideal for urgent needs. Flexible terms. They offer various loan options like term loans and lines of credit with diverse repayment terms to suit different business needs. No prepayment penalties, you can pay off your loan early without incurring extra charges, providing flexibility in managing your finances. Dedicated support. OnDeck provides dedicated loan advisors to guide you through the process and answer your questions. Cons of OnDeck. Higher interest rates. Compared to traditional banks, OnDeck's interest rates may be higher, especially for smaller loans or businesses with lower credit scores. Strict eligibility criteria. Their requirements, including minimum revenue and credit score, might exclude some startups or businesses with limited financials. Potential involvement of partners. While rare, your loan may be funded by another lender through their marketplace program, adding an extra layer to the process. OnDeck, while not a purely direct lender in every sense, plays a significant role in the small business financing spectrum. However, it's crucial to remember that they are just one piece of the puzzle. Before committing, compare options from traditional banks, other online lenders, and even brokers who can connect you with a wider range of potential lenders. Choosing the right funding partner involves carefully considering your needs, budget, risk tolerance, and long-term business goals. Don't let the lure of direct cloud your judgment. Thoroughly research and compare various options before embarking on your financial odyssey. Ultimately, the key to navigating the financing maze is informed decision-making and a healthy dose of skepticism. Remember, understanding the nuances of direct lending and exploring all available avenues will empower you to find the perfect funding solution for your small business's unique journey.